Hey everyone, welcome back to this week's Market Outlook, and this is going to be for the 9th of December 2024. Let's get this started with a quick recap of what's going on last week. Obviously, the main focus for last week was the NFE numbers, and I do want to talk a little bit about a breakdown here on the NFE numbers because it's actually pretty interesting. So, overall, what we saw with the initial market reaction was that because the unemployment rate kind of went up a little bit from 4.1 to 4.2%, there was a little bit of a sell-off in the US dollar there. However, on further breakdown on the NFE numbers, last month's number was actually revised up from 12,000 to 36,000, and then we have the NFE numbers, which is really beating out the consensus here. Coming in at 227,000. The forecast for last week was a little bit higher. However, the consensus was pretty much at about 200,000. So we do have that huge gain in terms of the NFE numbers. Now, what do we look at this? How do we interpret these numbers here? What are the likelihoods of the FOMC looking at this and thinking, oh, okay, what's going on here? Overall, I think the labor data that we had last week, it was overall a great number. It does shows that the labor market is still strong, and the jump up in the unemployment rate, it was just a marginal jump. We're talking about 0.1% jump on the unemployment rate, but the significant gain on the NFE numbers, that's basically what a lot of traders are going to be looking at. So we had that, and we also have the average hourly earnings going up as well. So overall, I think the labor market it's a great number. It puts the US economy in a very good position, right? So not really too concerned in terms of the data that we had last week. I think we're still on track for that strong US economy. The ISM manufacturing PMI number was also above the consensus, so we don't actually have a lot to complain about. Now this week, obviously a lot of focus is going to be on the CPI numbers here. Now if we take a look at the CPI numbers, the expectation here is for a little bit of a jump on the inflation number here from 2.6% to 2.7%. If this number jumps higher than 2.7%, then there's going to be a shift on sentiment here. I think market right now has been pricing in for that rate cut to happen from the FOMC. If the inflation number goes up higher than 2.7%, maybe closer to 2.9 or maybe even surprise 3%, then we might not be getting that rate cut to have in December. So there could be a lot of things that might change this week, especially surrounding the CPI release themselves. This is going to be very crucial for a lot of traders out there because there's a high potential that the market might have been pricing the rate cut wrong. And this is not new. This is something that has been happening, or pretty much the theme for 2024. So we'll see what happens here. And also not just that, this week also, it's kind of the start of the central bank rate decisions here. We've got the RBA tomorrow, expecting to hold interest rate at 4.35%, but with a little bit more of a neutral to dovish comments coming up from the RBA there. Canada also expected to cut interest rate. This one here, it's pretty huge. We are expecting a 50 basis points cut from Canada. So yeah, this is a huge expectation from the Bank of Canada here, 50 basis points cut. It is a significant cut. And that's basically what the market is expecting right now. We are also going to be looking at the Swiss National Bank here, expecting a 25 basis points cut. And also the ECB is also expected with a 25 basis points cut. So the theme for rate cutting overall, I think we got 3 central banks out of 4 this week that wants to cut interest rate, especially with the BOC there, 50 basis points. The RBA likely to remain flat here at 4.35%. But again, things might change. They might come out with a really dovish comments, or they might even surprise the market by cutting interest rates early. Not necessarily the case though. I don't think Australia needs that rate cut at this point in time. But everywhere else, Canada, Swiss, and the Eurozone, the Euro area, yeah, those are going to be our potential rate cuts for this week. All right, so those are going to be the fundamentals. I think this is going to be a very busy week. a lot of traders are going to be jam-packing a lot of the positions this week because then the next 2 weeks is likely going to be a little bit more on the quieter side. All right, let's take a look at the Aussie USD here. What do we have with the Aussie USD? Again, last week we talked about the potential for the US dollar to kind of strengthen, and that's basically what we got. And also the movement last Friday, we saw that fall with the Australian dollar here. Again, this is already closing below the 64 cents mark. And that's not just the daily close, it was also a weekly close there below 64 cents. We got one more support here in the low around August. That's about 63.50. And that's also where the support one is currently located, about 63.35. So we're going to be looking at about, with the Australian dollar here, moving closer to the lower end of that range that we have here between 63 cents to 64 cents. I think downtrend for the Australian dollar is still intact. We're still expecting the Aussie to kind of weaken against the US dollar at this point in time. Now, Euro USD, also interesting developments here that we have with the Euro USD. We had a little bit of a gap down. That gap was pretty much filled this morning as well. But what's interesting here, last week's price movement, we got two confirmations. One, we got a rejection pretty much at the Kijun Sen. That's a 50% retracement. We also confirmed a bearish order block that we have highlighted on the chart here. Right now, we are within that 1.05 to 1.0550 range, and this is the area where it's kind of a little bit unstable. We might slow down a little bit. Basically, bears are going to be looking at that break below 1.05 before adding on to new positions here on the Euro USD, and there are also going to be targeting 1.05 to 1.0525 in the short term for short-term profit taking as well. So the Euro USD, we had that bearish order block, we had that rejections there, but we don't have enough confirmation to see a lot of traders find a reason to start selling or start shorting the Euro USD at this point in time. The ECB rate cut might deliver that. If the rate cut happens and they gave out more dovish comments, then yeah, that could drive the Euro USD down towards the end of this year as well. Pound USD, we had the rejection from Kijun Sen there. Right now at point of recording, this is currently still, holding support about 1.27 to 1.2725 there. Where the weekly pivot is currently located, a breakdown below the weekly pivot, then yes, we are anticipating that move lower, initially towards 1.2650, but below that, obviously, we're going to be looking at a potential retest of those support at 1.25 and 1.2550 for the pound USD. We're just waiting for the oscillators to turn around. We're just waiting for that momentum to build up at this point in time. All right, lastly, we have the dollar yen. Still holding on strong there. We had that strong bullish order block there, and also that's about 149 to 150 level there. Again, stochastics looking like it is trying to attempt a potential turnaround in momentum here. Price is still below 150 at this point in time, though. And once it crosses back above 150, then yeah, we might see a little bit of a potential for this one to bounce back up to 152. However, one caveat here with the dollar yen: if it's traded inside the Ichimoku cloud this week for a prolonged period of time, it's likely going to get trapped inside that Ichimoku cloud for the remainder of 2024. The problem that we have here is that you can see on the Ichimoku cloud, it actually widened significantly. So if it doesn't bounce in the next 3 days, it might actually get stuck inside the Ichimoku cloud, and that could be a huge headache for a lot of traders, because then price is going to be trapped in a very choppy, volatile range bound market condition between 148 all the way up to 153, 154. That is a huge range to be for a choppy market. So just be a little bit more cautious when trading the yen crosses. Obviously, the expectation here is that a lot of traders are going to be still mulling about the potential rate hike from the Bank of Japan this month at the end of this year, whether or not they're going to be looking at that. I think there's a little bit of a confusion as well with the data coming in. We had that wages increasing in Japan, however, spending dropped significantly as well. So there was that argument there, is that going to push inflation up if people are not spending? People are earning more, but they're savings instead. So again, the Japanese economy is a little bit unique. It doesn't really fall into the same cultural specification compared to all the Western nations out there. This is going to be a little bit tricky on the dollar Japanese, so just be a little bit more on the careful side here for the dollar Japanese for the remainder of 2024 here. All right, so with that, good luck with your trades, and I'll see you soon.